Hello and welcome to today's market update from IG. I'm David Jones, Chief Market Strategist at IG, and I thought to start off we'd have a look at where we are in the markets, what's been happening over the last week, because today, looking ahead, this week is potentially a very volatile week, lots of major events coming in, but it's been a fairly boring couple of weeks for the major markets. If you look at the currencies over the last week, they've been really range bound. Euro dollar banging its head on that 13300 level, just can't seem to get through there. Same sort of thing with pound against the US dollar. We've seen good recoveries in both the pound and the euro against the dollar in recent weeks, but cable, pound against dollar, cannot get through 154. All this may well change in the days ahead. On Wednesday, we've got the latest updates from the US Federal Reserve, the FOMC statement and minutes, their outlook on the economy. And at the moment, it does feel like this is the only important thing from markets. We go from month to month just waiting to hear what the Fed has got to say next. Everything else, it's not irrelevant, but it's definitely not as important. We're just waiting to see if they're going to give us more insight as to what they're going to do regarding QE. So that's Wednesday evening. We could see plenty of volatility when those numbers come out. There's the risk in the days ahead of some fairly range-bound trading like we've seen in the last couple of weeks or so, but I don't expect that to continue towards the end of the week. Then on Thursday, we've got the Bank of England and the European Central Bank's decisions on interest rates. Again, their decisions on interest rates are fairly well expected, no change there, but it's what they say about QE going forward. And this time round, it's the first time the Bank of England will be giving forward guidance, the same way the US Federal Reserve does, about what may be happening in the future, what their decisions may well be. So we could well see much more pound volatility off those Bank of England interest rate decisions and their forward guidance on Thursday at 12 o'clock UK time. Then on Friday we have what's normally the major event in any month's economic calendar is the non-farm payrolls. We've seen some incredible volatility in recent months off that number. That's expected again this time round, and that's 1:30 Friday lunchtime. So I think plenty this week to shake markets up from the somewhat range-bound sentiment that's really pervaded over the last couple of weeks. If you look at stock markets, it's a similar sort of picture. We still have, I think, recoveries still in place for stock markets, although not much headway made over the last 10 days or so. The Dow is trading pretty much where it was 10 days ago, but whenever we see markets sell off, and we have seen the odd sharp sell-off, there does still appear to be people almost queuing up to buy into any weakness. I think the immediate level to watch on the Dow is around about 15,400. Just look how well that supported the market towards the end of last week, and it's a big level for about 3 weeks now on the Dow. So for me in the short term, any weakness back to there, I'd be expecting the buyers to come back in. The equivalent area for the FTSE is around about 6480 to 6520. Again, on the upside, it's really struggling once it gets much above 6600. That 6650 level is really holding the FTSE down. We could see these levels broken this week with all these major announcements going on. To look at another market for change, if we look at the Nikkei over in Japan, this is doing its own thing. This is off 10% in the last couple of weeks, around about 1500 points. Still very weak at the end of today's trading, and I think the levels to watch in the days ahead for this one, around about 12,500 to 13,000. And to end this on a stock, the big news from last week, the big mover last week was Facebook. We saw Facebook shares jump up around about 25% on their earnings. A massive jump if you look at the charts. We've seen plenty of false dawns for Facebook since their IPO just over a year ago, but so far at least in the trading after the results and the day after, there does still seem to be an appetite to buy into any weakness. We haven't seen that gap filled, so I think on the downside maybe $32.50 is the level to watch if we see any weakness in Facebook. So plenty going on this week. To stay up to date, you can follow me on Twitter, DavidJones_IG, and of course keep up with our research on IG.com.